Welcome to the third video in our Stock Volatility Box onboarding series. In this video, we're going to focus on the charts page. In the charts video, I'm going to show you how to actually pull up the models to see this instant framework for any one of the symbols we support. In the next video, we're going to talk about how to actually read these models. So stay tuned for that. In this video, I want to show you how to pull them up yourselves so you can follow along. Now, first thing is how you come to the charts page. You can come to the charts page by either clicking charts on the left-hand side or by clicking the symbols directly on the today page, which is what we did in the previous video, or by clicking the symbols inside of the scanner. Whichever way you get to the charts page, this is then what you will be greeted with. Now I have an example of SPY here, but you can change the symbol by directly coming inside of this text box and writing whatever symbol you want and inputting whatever symbol you want, and that will then load up the chart. Just press enter and the charts will load. Now to the right, you'll find the price and the market stage that that particular symbol is in. So if we were to look at SPY, for example, we can see that the closing price right now, I'm doing this after hours, 747.86, market stage accumulation, which it has been for 5 days. Very quick, easy to get this information about the trend. Keep in mind this market pulse information is based off of the daily time frame. It does not change as you toggle between the different time frames. That's because we're anchored on what the daily time frame trend is. Now, speaking of our time frame toggles, underneath you'll find the actual toggle switches for time frames. And the time frames we support are the 1 minute, the 5 minute, the 15 minute, the 1 hour, and the daily time frame. If you click any one of these toggle switches, you can see the chart loaded on for that particular time frame. And I think this is much faster than Thinkorswim charts. You'll also be able to see the models loaded on directly for that particular time frame. And I think this helps give you a very nice, quick, easy to read aggregate information of what is the volatility in this particular market. Now, one thing to note, as you get into the daily time frame chart, you'll notice that the models no longer load, but instead you'll see the market pulse line loading. This is to give you information of what is the pullback level we're looking at and what is that market stage that's contributing to the accumulation market stage we have. On the 1 minute, the 5, the 15, and the 1 hour, you will be able to see the models plotting exactly as we would expect. Now, when you see the models plotting, you should also see these two toggle switches to the right side. The first toggle switch is the daily and the hourly model toggle switch. And this is where you can change between the daily and the hourly volatility box models. The daily volatility box models give you one level to trade every single day, which means this is a harder to hit level. I pay more attention and give more weight when these daily volatility box model levels are hit, especially the conservative ones. Speaking of conservative, to the right side of the daily hourly switches, you'll find the aggressive and the conservative volatility box model switches. The aggressive volatility box models, as the name implies, is a little bit more aggressive. Conservative volatility box models are harder to hit. I like to use the conservative models on days like earnings, when we have FOMC, or just naturally high volatility in a particular name. That's where the conservative volatility box models are especially useful. Now, we glossed over the hourly models. We talked about how the daily gives us one level per day. The hourly gives us one level per hour of day, which means we have far more opportunities, and this is especially useful for some of those larger liquid names like SPY, Microsoft, etc. The names which might have less volatility that hits the daily models on a frequent basis, but very much hits the hourly models on a much more frequent basis. Now, underneath the charts, you'll be able to see a little bit of information around the actual stock or ETF that you might be looking at. The first piece of information you'll get is a little bit of context. And inside of the context box, you'll have 3 key pieces of data. The first is what is today's range compared to its typical range. This lets you understand, is today a high volatility day compared to usual or a low volatility day. Inside of the S&P, for example, you'll see today 0.6% versus a typical of 1%, which means today was a low volatility day. Makes sense, day before a holiday that the market has on a Friday. Now underneath, you'll find what is the 30 and the 60-day performance. So inside of SPY, 30-day performance plus 1.84%, 60-day plus 6.13%. Finally, you'll get quick dollar information around the average volume, which in SPY is 33.9 billion as the average 20-day volume. Now, the right box is where I think you can find lots of useful information for markets that you don't typically follow. This starts with support resistance levels, and the way I've ranked this is in order of what is closest to where price is trading. So if, for example, here at the top you see nearby resistance is closer and you have a long side opportunity, right away you should be paying attention knowing that, hey, you do have nearby resistance. Be aware of that. Have you already cleared it? Do you need to be aware of it? That's a level you'd want to keep in mind. You can also see if you have more support or more resistance levels nearby. So for example, in SPY, you'll see you have far more support levels nearby here. We have a level at 731, we have a level at 724. In terms of resistance, we have one level that we're flirting with right now, 0.22% away at 749.53. Outside of that, we have the level of 760.41. If you're wondering what that level is, come back to the charts up here, click the daily time frame, and that 760.40, if you hover over, is that pivot point before our most recent dip before price has been chopping around. So that's how you can make sense of the support resistance levels. We didn't even have to go to the chart to be able to see where are the support resistance levels compared to the current volatility opportunity we were being presented. Finally, if you scroll down, the last box that you'll see here is the recent trades. And this gives you a very quick idea of what kind of opportunities have you had more recently. Have they been short side breaches or have they been long side breaches? That's the key piece of information here. Now, I know most people would be looking at things like the stop and the target here. I pay less attention to that, mostly because many of these stops can oftentimes turn into winners simply by applying one of our setups. What I care more about is this a short or a long side setup that's breaching more? In the case of SPY, for example, we can see that the past 3 trades on June 12th have all been short side opportunities. What is that telling you if you think about it? Short side means that price has been rallying, which has been hitting the upper models, meaning you're seeing bullish strength. Now, June 12th, you also saw both back and forth a lot. You'll see a lot of June 12th opportunities here. So if you were to dive deeper into the back tester, that would give you granularity around what each of these trades is to give you sense around what opportunity set up on June 12th and why was June 12th such a high volatility day. All right, so that was an overview of how to use the charts page. Now in the next video, we're going to bring this together with how to actually read these models. By the end of next video, you should have a fairly good understanding of how to have this instant framework for both price and volatility for any one of the markets we support and combine that with some key information that you're already familiar with, things like support resistance and market pulse information. See you in the next video.